So we just got the fresh data from TREB, Toronto Real Estate Board, and that data is quite revealing because according to them, in the month of February, we have seen extreme level of inventory. We have seen the lowest level of sales transactions recorded in February. We have not seen that extreme level since GFC, since 2008 financial crisis. So both of these fundamental KPIs, we can call them, the inventory levels and the sales volume, they are on the extreme side, and we have not seen that level since 2008 financial crisis. But the prices are not moving. Okay, according to TREB, in the month of February, on a month-over-month basis, the prices actually climbed up 0.4% in February, not down, up. Okay, despite of the lowest level of sales volume that we saw in February, despite the highest amount of inventory levels we saw in February since global financial crisis, the prices went up. Now, if you compare this on year-over-year basis, the prices went down. Okay, last year the prices were up. This year the prices are down by 1.8% on year-over-year basis. Now, what does it tell you? It tells you that even though we are seeing a rise in inventory, even though we are seeing the lowest amount of sales volume, the prices are not moving. Now, you have to separate condos and single family homes. Okay, the condo market definitely is seeing a lot of chaos. Because condo has been investor driven market forever in Toronto. Okay, and of course those investors who purchase those properties in pre-construction segment, they're not seeing the prices that they booked for. The prices have come down, the rents are decreasing, so they are actually carrying those property in a negative cash flow basis. So they are going to dump those properties more likely than anybody else. Okay, but when you look at the single family homes, nothing is happening like this. Okay, the sellers are not budging. Okay, there could be some corner cases where somebody's really want to get out of the property market and use their cash for something else. They may be in a rush to dump that property. The sellers are not budging. Okay, look at this chart. So what does it tell you? This is basically the benchmark price of a typical home across GTA. Now this includes both condo and the single family homes. What this chart tells you, it tells you the prices are moving sideways. Okay, we went bananas in 2022. We crashed back down in 2023, and since then we're just making some small waves like this. Okay, that means the prices are moving sideways. They're not moving up, they're not moving down, they're staying stable. And the reason is, in the single family homes, we don't get a lot of new houses built compared to condos. Okay, and if we don't have a lot of new houses built, there is not much inventory to go after. And the sellers who are sitting on those properties, they know the worth of those properties. Even if you start a new construction on a piece of land, it will easily cost you up to $1 million to build a property, including all the construction cost, permits, levies, city charges, municipality. When you combine all of that, you barely have any profit left. So because of that, the sellers are not budging. They're not dumping those properties. Again, there will be some corner cases. Somebody's getting divorced and they have to get out of that. Of course, they will try to sell the property as quick as they can, but that's not a general behavior. So those of you who are waiting for a property crash and waiting for prices to come down to 2014 levels, it's not happening as it appears. Now, things could change, okay? If this tariff situation becomes worse, we go into depression, not a recession, then of course everything will crash along with property market. But as of now, the prices are not moving, and I don't see these prices will actually go down a lot. Now we have to keep an eye on unemployment rate. If the unemployment rate goes up, then of course everything will actually crash along with that. But here's the thing. These houses are collateral on the bank's balance sheet. The banks will not allow them to collapse. They will do everything possible to keep the ball rolling, kick the can down the road. The government will also try to do the same thing. They will not get the people out of their homes. They will try everything possible to keep the homeowners in their homes, extend and pretend. That's my opinion. I could be wrong, but Canada is a socialist country. It's not US, where people can just dump their properties because their pricing is going down. If I'm living in the property and this is my only home, I don't care if my property prices are going down. I will not sell it unless I'm forced to sell it. Now, if that forced situation comes, this could be a disaster for Canadian economy. Until then, I think things will continue to work like this. They will keep the can down round, they will keep the ball rolling, and things will go like this. Now, I'm not saying that the property prices will not go down. It may go down slowly, 3%, 2% over the long period, but there's no a big crash coming anytime soon unless we see a major economic disaster that can push the unemployment higher up and the government and the banks have nothing to protect this house of cards. Then, of course, everything is possible. But as of now, I don't see these prices are crashing down, at least for now. I could be wrong. Let me know what you think about that. Put your comments down below, and I'll see you in my next video. Take care. Are you feeling lost in the complexity of global economy and trying to understand how this is going to impact your investment portfolio? You are not alone, my friend. I have been through and I have learned the hard way, and I'm trying to converge all of my experience and learnings into a course that I just designed specifically for you. In this course, Mastering Macroeconomic Fundamentals for Investment Strategies, I'll show you how to decode the economic trends, navigate market cycles, and build smarter, adaptable investment strategies. You're going to learn, analyze key indicators like GDP, inflation, and yield curves, identify opportunities in commodities and crypto alike, and adjust your portfolio to thrive in any cycle. With real-world examples and actionable insight, this course will empower you to invest with confidence, no matter what the market is. Don't just react to the news. Understand them. Enroll now and take control of your financial future today.